Hi, I'm Greg Hunter. Back again is Bill Holter, and I just wanted to really flesh out a gold only interview where we're only talking about gold and about COMEX, or some people call it the CRIMEX, and all the short selling and all the stuff going on. And Bill Holter is an expert on gold, COMEX. He is a gold broker. He's an expert in financial markets, closely studies and follows COMEX. Bill, thanks for joining us again on USAWatchdog.com. Appreciate it. COMEX, a few months back, you were saying that, listen, at some point, the gold market is going to default. They're going to default on physical. Can you explain where we are today with that?
Okay. Actually, in the last year and a half, there's been one rule change, and I believe a second rule change. First, years ago, well, in past years, for instance, there would be 30 tons of gold standing on first notice day for delivery. And by the time the end of the month was done, that would be down to 12 tons. And we would, month after month, delivery period after delivery period, we would wonder what happened to that 18 tons? Where did it go? Well, apparently, what they were doing and what they're doing now in blatant form, in such a huge manner that it's mathematically impossible that there's even being deliveries made, is that they're doing exchange for physicals. In other words, COMEX is taking contracts that are standing for delivery and they're sending them to London under the rules of exchange for physical. Now, what's happened so far this year, there's been roughly 5,900 tons of gold sent to London under exchange for physical. The world only produces 2,700 tons a year. There's only one hoard supposed anywhere in the world that's 5,900 tons, and that's the U.S. Treasury, which is 8,300 tons and hasn't been audited since 1956. So what I'm telling you is over 200% of annual production has been sent to London for delivery, and it's an impossibility to deliver. The metal doesn't exist. Once it gets to London, it's totally shrouded. We see nothing in the way of proof or verification that delivery is being made. Basically, they're being sent to London to die. Now, the other change that's occurred, and that occurred on November 4th, which oddly enough, if you look at a chart, that pretty much marked the peak of the move we've had this year. On November 4th, the COMEX added a third category to gold holdings on the COMEX, or CMA added another category to the gold holdings on COMEX. In the past, there was only registered and eligible. Eligible gold was basically customer gold being held in COMEX vaults, and registered gold is the dealer gold held in COMEX vaults, earmarked for delivery. Now they've added a third category. They've added a category called pledged, and what pledged amounts to is their warrants for 100 ounces. Doesn't say in good delivery form. I mean, these could be doré, they could be gold teeth, they could be gold anything, as long as it's 100 ounces. Now, there's obviously no verification that these warrants are even for real, but what they do is when a firm deposits a pledged warrant, that's a warrant for 100 ounces, and it allows them to create margin to create new contracts. And oddly enough, the only, and this is 2 or 3 days old, I haven't seen in the last 2 or 3 days, but the only firm that had deposited these pledged contracts was HSBC.
What does that mean? What does that mean to
Well, HSBC has long been rumored, as one of the big shorts. I mean, they've been rumored as, potential to blow up. See,
And,
when gold ran from 1250 or $1,300 to 1550, the shorts were getting squeezed, and in order to uh, allow them to create more margin to cover the margin calls, these pledge contracts were created. Now, one other thing, I was reading through the CME rule book, and in chapter 7 at the very end, and this is something I hadn't read before. I kind of kicked myself for not reading it, but uh, these COMEX contracts, they don't have to. We know that they settle for cash. They've settled for cash for years and years and years, but they don't even have to settle for cash or gold. They could settle for bananas. They could settle uh, for gravel. They could settle for anything as long as both parties agree to the settlement. It's good settlement. They send the settled contract to the COMEX, and COMEX disavows any liability. So I mean, gold contracts could be settled with anything as long as both parties agree.
are we getting close to, if they set 59 tons of gold to be settled in London, and they're basically, offloading that over to
But that's a
London?
stupid number, Greg.
Well, I mean, so
It's
27
an
tons.
impossible number.
So how close are we to just an outright default?
It's already happened. It's already happened. They can't deliver. I mean, just this month alone, there's what 40. There's now for December. There's 40 or 41 tons standing for delivery, which is more than there was on first notice day, by the way. So that's even increased, which is totally different than in the past. And I think they only have 37 tons to deliver on. And what will happen is you won't see, you will not see the movement inside the COMEX showing delivery.
What is
That
that?
37 tons will not be eaten into to deliver. I mean, are they are they cutting deals where they pay 20, 25% fiat premium to settle? I mean, who knows? It's totally shrouded. You can't see the inner workings. But you know by the sheer size, 5,900 tons in less than 1 year for delivery, that's fraudulent. And I hope COMEX or CME or somebody sues me for saying that it's fraudulent, because then we get into discovery. And I'm sure there's 10,000 lawyers in the US that would do this on a pro bono basis just to get to the truth.
Why isn't, if we've got that kind of lopsided delivery, which is non-delivery, why hasn't the price gone up? A lot of people are saying, well, then if this is default's already happened.
Because they're issuing paper contracts that are naked. They're diluting the amount of contracts outstanding. They're meeting the demand with paper contracts that have no gold backing. I mean, the gold contract is not about the gold price. It fixes and makes the global gold price, but the workings, the inner workings, has nothing to do with gold whatsoever. It's a sham.
So you're telling me that, so if you wanted to buy gold at COMEX, you won't get it. That's what you're telling me, right?
No, that's not what I'm saying. If you go out and you buy one contract and you ask for delivery, you'll get it. But if you go out and you buy 1,000 contracts and you want 10 tons of delivery, something happens behind the scenes.
Well,
You
can't
get
a sovereign
you
wealth fund,
get pushed off to, of course, yeah, sovereign wealth fund, a hedge fund, whatever. But what happens is you'll get pushed off. It'll go to the exchange for physical. I mean, we don't see the physical metal being delivered. We don't see it either in New York or in London.
how long can they keep doing this? Are you telling me this is a Ponzi scheme, and then how long can they keep doing it?
That's my opinion, and I have no idea how long they can keep doing it. I thought 3, 4, 5 years ago this thing would blow up when we finally figured out exactly what they were doing.
And you think it's total Ponzi. Why does everybody keep quiet about it?
Well, there was a theory 2 years, 3 years, 4 years back. I think Rob Kirby even talked about it, that on COMEX, people were getting a 20 or 25% fiat premium to not take or demand delivery of physical metal. So, I mean, what is that? What is the premium? Is it a bribe?
And this, I guess, this just shows you how feckless and how corrupt the CFTC is. I mean, they should be riding herd on this. You can't have a physical market. You don't deliver physical.
Right, and I mean, they did their study in what, 2010, 11, 12. I think it was a 4 or 5 year investigation into silver, and they came back and said, no, we don't see nothing fraudulent. Well, actually, they didn't say nothing fraudulent. They said they didn't find anything actionable. And I wrote at the time, the word actionable to me means they found something, but they can't do anything about it, more than likely because it had government approval.
So how long can this Ponzi, and you call it a Ponzi?
I don't know. I have no idea, Greg. You can't ask me how long, because this thing should have blown up years ago, and it hasn't blown up. When will it blow up? I can't tell you. I'm just telling you, mathematically, it cannot sustain. It can't sustain.
What does that tell you about the price?
Putting it all together, I think I did the interview with you, where I did the math. If you take the U.S. debt, and at that time it was 21 trillion. It's higher now, and you divide that by the amount of gold that West Point, Fort Knox, etc., supposedly have, you come up with a number of $87,000 an ounce. That would be the gold just covering our debt. But if you put everything together, to me, the dollar goes to zero and won't buy a cup of coffee. So how many dollars will it take to buy an ounce of gold? The number's infinite.
Your prediction for 2020? What would you be predicting for next year?
I won't predict prices, but I will tell you I think 2020 is going to be the year where truth finally leads to consequences.
And you think that'll be reflected in the gold and silver markets?
It'll be reflected in every market.
Thank you for the tutelage on gold and what's going on. Wow, what a lopsided number. I mean, they got obviously there's big demand for gold, and it's being suppressed or muffled or smothered
with paper derivatives. Derivatives hold markets up and they hold markets down, and that's the way the world is being priced. It's being done with derivatives.
And you wouldn't be backing off on accumulation of gold and silver here. You would just keep.
I'd be backing the truck up
because of how unstable everything is with the whether it be.
People ask me what percentage should I have in gold, and the old rule of thumb was 5 or 10%. And at this point, I just tell people, well, what percentage of your net worth do you not want to lose? Whatever you don't want to lose, put into gold and silver.
Sage advice. Bill Holter, thanks for coming back for another round, another part on just telling us about the gold and silver market, mostly the gold market. I appreciate it. Bill Holter, you have your jsmindset.com with Jim Sinclair. You have weekly symposiums on your podcast. You have a subscription service. You guys do a great thing, though. You still have a pretty great amount of free stuff on jsmindset.com, and then you have your subscription service. How much is that?
It's $129 per year.
And you get I think you were telling me in another interview, you get basically 50 symposiums. With
right.
some of the, a year. You get
Yeah, it's like a conference every weekend.
That's great.
It's a 1 hour conference.
And there's stuff on there that you guys do not release to the public that you talk about, and it's no
Right.
holds barred, and you get nitty gritty and talk about just that alone. But access to
Yes.
you and Jim,
Yep.
and behind the scenes is fantastic. And you still have a great site where you can get free stuff too, where you comment on the article. That's what I like. I mean, I like to see, oh, you have this article. Why do you have this article posted? You have a comment that explains why you have it,
Right. So we
posted.
do
Really
have
good.
fun with our comments on that.
And you do some of your work every month. You put out for free on the site, but most of your stuff is behind the paywall.
Correct.
All right. Bill Holter, thank you so much for joining us. I'll put the links up at the end of the after the interview section. Of you people on YouTube, go to all links are on usawatchdog.com, and you'll be able to sign up and go to jsmindset.com, or just go to jsmindset.com. Anyway, thank you very much, Bill Holter, for coming back for part 2 on the gold market. Thank you very much for giving us that warning and giving us that piece of information. Wow, unbelievable, unbelievable fraud. We must be near the end of the Ponzi. We have to be. Anyway, Bill, thank you for joining us today on usawatchdog.com.
Thanks again, Greg.